Let's get to Stephanie Link, CNBC contributor Stephanie Link of Hightower. All right, Steph, in your view, what's happening, what's causing it, and what should people be doing, and what are you doing?
Yeah, so it's great to see you. I think this is all about, clearly, monetary policy. Is the Fed behind the curve? It'll be interesting to get the Fed minutes today. It's also about inflation. Is it transitory or isn't it? I personally believe it's not all transitory. Some of it is, obviously, on the commodity front, and as you get through these supply chain issues. But if you look at the wage number from the GDP report at 0.7%, then you look at the JOLTS number of 8.1 million, and then you listen to what McDonald's has to say and Chipotle had to say in terms of increasing wages. That is certainly something on top of mind. I know it's on top of mind for me as well. And then also just add in seasonality and profit taking. Remember, the S&P is up 85% from last year's lows. So I get it. I do think it's very interesting that money in money market funds is now back up to $3 trillion. So there's definitely more of a defensive feel. I'm really not changing my strategy, Joe. I really believe that the growth will continue to stay strong, maybe not at the current levels, but I believe all this stimulus in place continues to lead to momentum in the economy. And therefore, you do want to have more cyclical stocks exposure. Maybe they take a pause, but maybe that gives you the opportunity.
Yeah, it leads to positive market activity until everything just hits the fan and we're totally screwed for like 10 years.
But you know what? Step back on the consumer side of things for half a second, because that is 70% of U.S. GDP, and they're doing pretty well. If you look at personal consumption at 10.2%,
no one's gone out.
Personal income,
no one's gone on any vacation. No one's eating out.
That's right. No, my point is, but people want to. Savings rate at 27%, right? If it goes back to 5%, which is the historical average, that's $2 trillion in pent-up demand. That money is going to go to places like hospitality and restaurants and leisure and that sort of thing. And yesterday, MasterCard released spending pulse data. U.S. retail sales in the month of April, ex-auto and gas, up 23.3%, but importantly, up 10.8% from 2019 levels, which is pretty impressive. And restaurant spend, believe it or not, versus 2019 levels is up. So people are starting to get out, certainly in pockets of the country. And then as we reopen more and more, I think you're going to continue to see this trend. Again, consumer is super important for the economy, and they seem to be doing okay.
Santoli, we always talk about you. You're experienced, you're smart, you're good at math. A couple of years ago, we said, what's after T? What's after trillion? I think we got to bring that back. Do you know quickly?
We have time. We have time.
Were you sure? Isn't it quadrillion?
Sure.
What's 1,000 trillion? Is that a quadrillion or something? We don't even blink an eye. That was my point to Stephanie. We talk, we spent, $4 trillion already. What we really got to do is spend another $2. We don't even blink. We don't blink when the Fed's balance sheet, which we used to say, oh, my God, it's up to $5 trillion. We don't care when it doubles from there. Don't you think that someday this matters?
I don't know in what respect it's going to matter. I think those are basically abstractions. Honestly, I mean, the Fed's balance sheet is just this thing that just sits off to the side, and you can interpret it any way you want. Now, the $2 trillion you're talking about in terms of fiscal spend that may be on the table, I don't even think that's coming into the market equation very directly right now. In fact, in a few months, the talk is going to be, well, we're not going to do another $4 trillion in 2022. That means there's fiscal drag. That means it's one thing that's going to kind of moderate the growth rate of the economy. It's not going to be about more and more and more, I don't think, at least unless you think that infrastructure plan as proposed is going to get greased right through.
Shepard Smith here. Thanks for watching CNBC on YouTube.